He's been trading for over a decade with an in-depth understanding of fundamental analysis and also technical analysis.
In my opinion, and over the years, I learned that fundamentals move the market. If the market is purely based on technical, we would just go sideways the whole time because it just goes to resistance and support, and that's it.
In this episode, we are joined by Pasquale, one of the best prop firm traders in the whole industry, because he has amassed over $2.5 million in prop firm payouts. But beyond all of that, he's really understood the opportunity and the strategy of maximizing withdrawals from prop firms.
With prop firms, it's difficult because the industry is very young. There's a lot of noise in the industry, so a lot of firms vanish in the next month. So I try to get the most out of them in 1 month, and that's it. With one example, the funded trader that I made the most of, I think I started 50 challenges.
Oh, wow.
And in the end got 7 payouts.
The risk reward was there.
The risk reward is 1 to 9.
When it comes to taking such substantial amount of profit from the market, over $2 million, what are the key things that led to that? Did you have any mentors, or what was shaping that career path for you? Okay, ladies and gentlemen, we're back for another episode. Today will be a very interesting one, I believe, because we are joined by a trader, but not just a trader. He's a trader who's done phenomenally well, in my opinion, compared to the industry as a whole. If I'm correct in saying you've taken more than $2 million from prop firm withdrawals.
That's correct.
That's correct. And then you've also delved into business where you've had brokerages in the past and you've got some new projects lined up. So I think this embodies quite a good episode, because the podcast idea was to bring on business and entrepreneur-minded people, but also traders as well. So this is the perfect marriage. So I'm excited to see how deep we can go and the topics we can touch on. I wanted to kick off and just give you the chance to talk about a very brief summary on your career, from how you first started into trading and then pioneering into the broker space and then entering as a retail trader into the prop firms and until present day.
Perfect. So I started trading by accident almost in 2008 by dabbling to eToro at the time. Okay. Came through them because of an ad, and that's why the accident happens.
Mm-hmm.
But keep trading. But the very first steps were very difficult. But I always was very interested in investment world, all the kind of stuff, and always as a professional in that kind, if that makes sense. And at that time, I started university, so I had a lot of time to trade, to learn, and pretty quickly I knew that's my future job.
Okay. And what called you from the industry? Or it was the curiosity of trying to solve the market, or it was just you had that mindset of you want to be analytical in finance? What was calling you?
I think it was way before. I was always interested in how banks work, even as a young guy.
Yeah.
And when I first started trading, it was so much fun making money. And I was successful in the first year in university. So it felt like, this is me.
You were successful in trading in your first year?
Yes.
Well, that's crazy. And this is in 2008, you
yes.
said? Okay, so long before the kind of industry has developed on social media as it has. So what kind of resources were you using, especially to find profitability rather quick?
Only Forex Factory at that time, because there was nothing else around.
Wow,
so no YouTube videos, no mentorships, anything.
Crazy.
So you had to do it the hard way by yourself. But I think it's always like me, because I always want to know more about the behind the scenes. I'm always curious about trading or anything in life. So I think that especially helped me to get the knowledge and experience in trading.
So I had a similar start when I was trying to get into the industry. I was on FX Street, Forex Factory, and you have these news article reports, you have random live streams. But for me, it always felt like they were saying the very cliche things that never really happened. It's like, Euro USD is bullish. It might be bullish for the next month, but that made me think it's bullish for today. So that for me was very misleading information. It wasn't useful to me, at least. But you had no other choice. So when you were looking at these fundamental news releases and such, how did you build a strategy off the back of articles and people's opinions and general consensus?
I think it came over time. If you want to know what's behind a move and do it over years, you start to see the connections between news events, between economic events, and then you create a sort of bias for yourself for a week or a month. And the more you dabble into that, the bigger your repertoire gets on fundamentals. So as I do it now, I start the week on Sunday. Usually look at the news that are ahead or the month ahead, and what's already priced in. Maybe what has to be repriced, maybe because of a surprise news event or anything like that. And that way I create the buys, and from that point on I go to technical stuff during the week, intraday, and make my positions.
So how are you able to? You're waiting for a news release, and you'll do your research to kind of preemptively estimate what that news release will be, or you're waiting for the result of that to then build a case and build a trade after the news, or it's usually before.
More both.
Okay.
Yeah, because sometimes, and that's very rare, that you know beforehand that something is not right in the market right now and has to be maybe repriced at a certain news event, and you have the chance that the repricing comes. For example, the last Fed meeting was one of my best trades this year.
Okay.
Because it was a high chance that the Fed board has to push away the rate cuts next year, because market pricing in rate cuts the whole year, and usually being wrong on that, and especially the economic forecast for next year were better. So, and that's why on Sunday before the Fed meeting, I decided I want to trade the meeting.
Okay.
And it's like 2 or 3 times a year that I'm so confident on it.
Right.
And I opened the trade like 15 minutes before the meeting, and then the US dollar got strengthened
So
out of it.
you're trading based on fundamental geopolitical factors, interest rates, and things of that nature. That usually gives you a more swing or long-term horizon. So does that mean you are a swing trader per se, or are you kind of seeing the long-term trajectory and catching a scalp or intra-session position in that direction? How are you doing that?
Different for prop firm trading than my personal account.
That's why I wanted to ask, because prop firms will cap you at the weekend, or you have different conditions. So how are you managing that?
Definitely. So my personal account was swing trading strategy. I open the trades usually on Sunday or Monday, market opening, and the trade is based for the week. So I want to close it maybe on Wednesday or Friday. Because it's a more safe aspect to it. With prop firms is pretty different, because all the rule sets, drawdown limits, maybe resets on daily. So it's difficult to execute real swing trading strategies with them. That's why I scrapped my book and did a complete different strategy, more intraday, not scalping, but pure
and
intraday.
That prop firm adjusted methodology was more technical, so it was still around fundamentals primarily?
Still around fundamentals, but I have a very simple technical strategy behind it to execute. Like if my fundamental bias tells me I want to go short US dollar this week, I search for this on my technique. Okay,
I want to ask a few questions for the first year or two where you were finding your profitability, but you were still immature or amateur in your career compared to now. You developed a lot since then. I want to understand the difference between year one and now how many years are you in now? 15 years in. So the main questions that helped me understand where you were at was, what was your risk management like on average? How often were you taking trades? What was your average win rate? What was your average risk to reward back then and now in year 15? And how has that developed?
So in the beginning, win rate was quite high, like 80%.
Oh wow!
But
how
the
often
losses
were you executing?
more or less the same, like 1, 2, 3 trades a day, because it was always these intraday things.
Across how many pairs, currency pairs or asset classes?
3, 4 in the beginning. Like I like the GBP pairs.
Super active. Okay.
Yes, but in the beginning, like 80% win rate. Is not completely right, because the losses were quite high. So in general, it wasn't really profitable, because I let losses run and cut down the winnings.
So the issue was not the win rate; the issue was the risk reward you were using. Is that because of lack of risk management, or?
Yeah, because I was just starting. I didn't know. Yeah.
And now fast forward 15 years, what does that same data sets look like?
Well, the risk reward is around 1 to 2, 1 to 3, sometimes 1 to 5, because I execute just 1, 2 trades a day, and they have to matter the
and
most.
And the win rate is still similar, or it's
No,
come down?
it's around 60 to 65% with
Phenomenal.
prop firms.
Okay, so with a 60% win rate and up to 1 to 5 risk reward, that is a very good distribution. Average trade duration is just like Monday to Wednesday. Like that.
I try to close it the same day, but
Okay.
sometimes it runs for 2 or 3 days.
Okay.
Depends on market.
So that's very interesting to me, because you're making a fundamental bias which can be priced in or can manifest, or that news can simmer for days or weeks at a time, but you're kind of looking at a session play. So why have you still decided to have fundamentals as your primary source of decision making, as opposed to just going pure technicals? For example, it's very different for me to hear this angle, because I'm 99.9% technicals and I'll barely look at the news. If anything, it's a catalyst for I'll very quickly hit my stop loss or very quickly go into profit, and then I'll see, oh, it was a news event. But I'm very, very technically based. I'm sure you have competence in your technicals, but you've still decided to stay with a fundamental premise. Why have you taken that decision?
In my opinion, and over the years, I learned that fundamentals move the market. As you said, like if you trade pure technical, sometimes anything can happen and it goes through a stop loss. If the market is purely based on technical, we would just go sideways the whole time, because it just goes to resistance and support, and that's it. The market movers are the fundamentals. These are the events, not only in minutes of the event, but they define the market structure for a year or for a month or for a week. Depends on how big the move is in the fundamentals. So these events are just too big to left out, in my opinion. And
I completely agree on that, because if it wasn't for fundamentals, price would just be stagnant. So what is actually causing the supply and demand movement or investor confidence and not? I agree on that. But what about the notion of we are probably the last to find out the information? And as you said, certain things get priced in before the public will find out. And I believe the market price action can show you that decision, or what is being priced in, or what people are thinking. Through price action, you can start to see that footprint. And then when the fundamental release happens, or the news release happens, you kind of see the resultant of that as a cause and effect. But the cause was already priced in, or starting to see the signs, which is why, for example, it's not a place of naivety where I refuse to look at fundamentals because of an ego. It's more that I find sufficient from my price action read that I can start to see, okay, this likely is going to be bearish today, and then the news release kind of comes alongside that. Do you not see the telltale signs of what you're reading in the fundamentals in technical analysis itself in price action on a lower time frame?
Yeah, definitely. So and if I'm talking technical, I'm almost always use price action patterns, and but I think what fundamentals is to me is it gives me the certain bias that what I want to search in the week. It's not just news events. It's just how I think the market is currently structured. Do the big players want to sell US dollar because of interest rate differentials, for example, from Japan to US dollar to US right now? So this gives me like the edge in my technical approach. So I don't get caught in bad trades. I would say it like that.
And when it comes to fundamentals, that's a very broad term, just like technicals is. What works for you specifically, or what are the key things you want to read in fundamental analysis that is something you're going to apply to therefore decide if I'm going to execute on a trade or not? For someone like myself who is not using fundamentals at all, where could I start to look that could probably be of benefit to my decision making?
So I have like 3 layers, as I would say. The first is the most important one. It's interest rates and inflation. Everybody, everything that moves, that is the most important to economy. And the second layer is unemployment and employment stats, all the kind of stuff, because it reflects the health of the economy in a whole. And the third is just the standard economic data like GDPs. So, and the combination of those 3, but in the tier like A tier,
yes.
S tier, and so is pretty important. And I go like from top to bottom of importance, and try to find connections and what's already in the market, what could be a surprise to the market if something is happening, and then I I just listen to squawks, listen to some real good economists and what they think about the current health of the economy, and that's how I build my bias in the end.
And you primarily focusing this analysis, fundamental analysis, with these layers that you mentioned, on USD only, or are you looking at all major economies?
Still, since I'm trading only gold with the prop firms in the last 3 years, it's just the US economy.
Okay. So with prop firms, you're only gold, and then in your personal, it was multiple asset classes.
It was 25 pairs, yeah.
Wow. And right now, what is where most of your attention is at for prop firms, or is your personal capital, or is it's equal in terms of attention?
No, I stopped trading personals when I started with prop firms because I want to just
maximize,
put the risk in one basket and not in both. Like because I'm investing my money outside of prop firms in other things. Yeah.
Okay, so I've started to understand and unfold the layers of your fundamental side. Talk to me about the technical side, because that's where my attention is at. So maybe I can relate, or we can have a bit more of a debate. Let's see how it goes. But what is your confluence hierarchy for technical analysis, or let's say the top 3 things you look for directional bias, and then for actually an execution? How do you do that?
I keep it pretty simple. I have on every chart, I have the 15 moving average, the 100 moving average, and the 200 moving average.
Okay.
These are my everyday use. And I execute trades only on the 1 hour time frame up to 4 hour. This is
not below the 1 hour time frame.
No, nothing below.
Wow. Okay.
Because I'm intraday. I'm not the scalping guy. Yeah. And after that, I use just simple trend lines, simple resistance and support zones, and that's it. And I want to see how the price reacts to those things. To those zones, I would say. And if I see a certain reaction, like denial of zone, I just enter the trade. And my stops and targets are pretty easy to set as well. The stops are on the next support zone, and the targets, I have multiple targets, but I want to see a certain reaction on target 1, target 2, target 3.
And therefore your stop loss is basically around a 1 hour candle or a 1 hour zone. Is that how you're determining your stop loss?
No, on the next structure, let's say on the 1 hour. If the structure is way above, then I have to risk differently.
Okay, so you will have at times quite a large stop.
Yeah.
And what is your thoughts on the idea that every daily break of structure starts off with a H4 break of structure, H1, M15, M5, M1. Like every move starts off on the M1. And I know you can therefore enter like a chaos zone where there's a lot of movement going on. But for me, I find so much detail in that area. And for me, it becomes quite very different that you're not even wanting to look below the 1 hour time frame. And I found that to go to the low time frame, there's only 2 real reasons we should do that. That could be number 1, because we don't have enough confirmations. We have doubts. So therefore, if we jump down to a lower time frame, we can reveal more information on a lower time frame to see if there's a reaction, rejection, what is going on for detail. Another reason is for precision. That's the 2 reasons. One is for confirmation if there's a doubt. Another one is precision. And therefore, I'm really sworn to the lower time frames. And even if I can hold a trade for a couple of days, similar to yourself, intraday, I'll always start on the M5, M1. I'll look at the daily. I'll look at the Asia session, look at the range of Asia. That's my first liquidity pool to frame the day. Then London session, what is that volatility doing? Is it tapping into a zone that is interesting? Liquidity runs and so forth. Is that kind of stuff, or let's say ICT, which is where I'm sure everyone has at this point, spent some time looking at that kind of stuff. Doesn't interest you?
No, not really. I've had a look into anything the past 10, 15 years. So
because it's been working for you and you didn't want to.
It's working. Then for the lower time frames, it's just too much noise for me, because I'm not that dependent on the exact entry, because I want to trade zones. And for that, it doesn't really matter. And especially when I traded 10 years ago, it was so mentally draining when I used like 15 minutes, 5 minutes time frame, because I have to always look for it, and it's just too much noise in the end for me. And nowadays I find that it doesn't really benefit my system in the end.
Okay. this kind of, at least the technical side, I can really understand exactly how you're managing it, because I had something similar in my first year too. The difference being I couldn't find profitability in it. And I think I'm the majority case in that sense of most people struggle with very simplistic styles of technical analysis. Obviously, yours is supported by strong fundamentals. But where do you think, what was defining for you to find profitability in this kind of approach? Whereas other people, majority of people would struggle, even though it's very easy to understand EMAs, it's very easy to understand the trend line and so forth. The issue is not understanding. The issue is actually deployment of that correctly. What is that difference between myself and a lot of traders and yourself actually making it work?
I think a lot of experience, because you've been through so much things, and you create this feeling of the market. I would say
Okay.
you and if you stuck to your system over 10 years, then you know how market reacts, and you adapt to it all the time. So I think it's feeling, it's experience, and also trading isn't easy. So if you start trading, it takes years to become good. And in my opinion, the biggest thing is the psychological approach that you have through trading, because usually the first years are a struggle, and then if you go through the pain, you understand how you should tackle it. Over trading, all the kind of stuff, and eliminate it, and that's how we get a better, become a better trader. And in my opinion, a system itself, a trading system, only makes about 10 to 20% of the trader itself. The rest is just mental.
Really?
Yeah,
Okay.
in my opinion, because there's so much essence to how you approach your trading, instead of just simple executing a system. Because if there would be the perfect system out there, technical system that anybody can use, it would be found by now. And let's say you have a very strict system, technical system. I think if you sit down two different traders, there will be two different outcomes of it. Because the main reason is the person behind it. Does it suit you? Does it what's your approach? What's your mental game behind it? And then I think that's like 80% of trading, and that's where
I agree that the psychology component can be a huge issue, and even for myself, I struggle with it a lot at times, and therefore the result of that, where I find myself and many people do struggle with psychology, is I try to make my approach to the market as discretionary, away from discretion as possible. No subjectivity, or as little subjectivity, which is why I've developed my own trading models, my entry criterias, and that will be down to exact things I need to see. So I'm no longer trying to go on sentiment or how I feel, or if it's reacting off a level. I actually have, if it's a formula in essence, with daily models, market structure related, liquidity related, and lower time frame with timings. So for example, if I see everything I need to see, but it's not in my time window, it's not my trade. If I see everything I need to have in my time window, but I'm missing a run of liquidity, for example, and manipulation, it's not my trade. So I try to make it as objective as possible to remove that psychology component as best as I can. And the reason being is because I didn't know how to manage my psychology well, where you hear the things in the industry of you're feeling these emotions, okay, go to the gym or journal or meditate. Or these are the things I've heard around. And the thing was, I recognize my emotions. I would see that they are there, and I see what it's doing to me. It makes me want to jump in. It makes me want to re-enter. And it's all around an unfavorable outcome. We fear because we have don't want to fail the challenge. We are greedy, and that's from an unfavorable outcome. So it's not that I didn't know my emotions. I knew they were there. I knew the techniques to control them, but in the end, there was no way for me to be like totally away from them, which is why I was like, I don't know how to interact with that side, but I know how to interact and support it with my technicals. How have you managed that dilemma of when you feel emotions like we all do, especially in trading, it's a very heightened state, money's involved in all of these things. How have you found, as you said, it's for you, it's like 80% the trader behind, and that comes down to psychology. What are the key things you are doing to manage that?
Nothing special in the end, but I think it's more of my personality, because I'm very detached to money, to the accounts that I have, and that's just me myself from the beginning until now. It's still the same.
What makes you detached from these accounts? Is it because you had a salary and a job and a decent financial base, or was it more you know, you have supporting, loving people around you. There has to be a reason also,
Yeah.
and that you feel like this where others don't.
Yeah.
What would you attribute that to?
So I started trading right after school. So I had no job, I had no financial background on that,
Yeah.
but I had also no pressure. So I had no family that I have to support. Like it was like a no pressure environment for me from the beginning. So I could explore by myself.
As in, you didn't have huge expenses that you needed to make money. It was more like, let's see what I can learn and do.
Yes.
Okay.
And also like my persona is like that. I and the curiosity behind it, behind everything is like I want to know stuff. I want to know the behind the scenes, and that helped me. Like my learning curve is quite high or quite fast in that regard. And also right from the start, the first account that I blew in 2008, it wasn't a big deal for me. And until now, if I'm down 10K on a funded account or whatever, I could just close the trade and the next moment talk with someone and no issues.
You've done it so many times for 15 years that losses have become normal. It's you know, it's part of the game. When it comes to taking such a substantial amount of profit from the market, from the prop firm industry, over $2 million you've achieved. What are the key things that led to that? But more importantly, did you have any mentors, or what was shaping that career path for you?
I had no mentors because I had to do it myself, and I don't really trust mentors in the end.
Yeah.
I tried so much systems, everything, but nothing worked. In the end, no EA, no scalping technique, nothing.
What about just to understand fundamentals to the level you have? Where was that knowledge? Was that through professional academia, or was that through online stuff, YouTube videos, or where did you develop that skill?
I think just the curiosity to try to know how it works. So I did it by myself, and it was like over 10 years spending time reading stuff, like reading the fundamental game, listening to economists, how they think the market shapes out, like watching Bloomberg, watching CNBC, and over the years you create this
understanding. It's a holistic understanding. It's not a strategy or one-dimensional thing. I like that. Do you think new and upcoming traders should take that advice and say you don't really need mentors and go on your own journey to learn everything there is to learn and find your answers yourself? Or do you think there's benefits in finding someone and learning from them directly?
I think a little bit of both. I don't think signals or courses are good. I think if you have a real mentorship, it's good. If there's someone who really teaches you trading and what trading is about, and not just a pure system, because in the end, trading is the same as a job or professional sports athlete. They are not just good by themselves. They train a lot. They practice. They do the same thing thousands, millions of times to get good at it. And trading is the same. If you're in the game 10 years and see a lot of stuff over and over, it's repetition at that point, and that makes experience, and that makes a good trader in the end.
I really like the approach you're mentioning, and in my own journey, if I'm to draw a graph or an equity curve of my progress, it was like at the beginning, it was very, very fast. You're learning everything there is. You're learning every single strategy, every school of thought. And at least when I started, there was so much content online that, and I'd go on Telegrams and stuff. I'd find every course. So I had so much information to take in, and that felt like I was making a lot of progress. And through education, maybe I was not necessarily at becoming a good trader, but just learning. So that was a fast moment. And then I started to level off, and I was like, okay, I don't really know what's going to work. I don't know where to put my attention into it. So then I started to go to the known courses and learn what's out there. And that's where I thought, okay, I picked the best one, whatever. And it didn't really work like that. I thought it would be like this, and then you find the best course and it takes off from there. And in fact, it didn't. You think it will, but it doesn't. And for me, it was like that level off for a long time. And I actually stopped doing courses because I felt like I've learned so much stuff. And then when I started to do more and more information, I realized everybody's saying the same thing again and again. At least 99% of the content is overlap with one small difference. And I thought, okay, well, each new thing that I'm learning, I'm wasting time because I already know this. So I kind of mentally gave up on all of that. And then I just thought, let me stick to 1 or 2 pairs. So in the beginning, I was like this, 25 pairs, looking at everywhere, looking for opportunities everywhere. And I was so all over the place that I didn't know where to focus, and I didn't know what strategy to focus on. I didn't know where to focus on. For me, it was just chaos. And then when I thought, okay, let me refine it all the way down to just 2 pairs, and I started to have my time windows. And in the last 2 years, I've not missed a candle on EU or GU. In the London session, New York session, I haven't missed a candle. And just through that process of watching the market and just learning its tendencies, learning daily cycle variance, seeing that every single day for 2 years,
Repetition.
I learned so much more than any other course I did, and also highlighted to me the issues I was having of like, okay, where are my bottlenecks? Where am I struggling? And I've spoken about it a few times of a big breakthrough for me was not risk management. I felt like that was a simple one to control, at least for me, just fix the risk and do it like that. But it was actually optimizing my profit taking, where some people say at fixed take profit levels, other people say hold full volume, whereas I was looking at my data and thinking, well, certain trades do go to full volume, but not all of them. Some of them go into a little bit of profit and reverse. Some of them 50% reverse, some of them 80, some of them all the way. So when I plotted that data and I realized it's like a bell curve where some of them go all the way, some of them don't go any of the way, but a lot of them are in the middle. So then I made it objective. Okay, I'm optimized to take profit around this level based on my trade. So I took a very data approach, but that would not have ever happened with a mentor. And just my understanding of lower time stuff, it's all been through the market. So my belief has become, sure, have a mentor to get the base knowledge, understand the lingo and the terminology. After that, and I think you're a great person to therefore emphasize this point, it's an individual journey. You got to just put your time and do the reps, and you will discover the information that is behind there. I want to understand, there's one thing being an analyst, and then there's another thing being a trader. You can understand price action, you can understand fundamentals, and then there is a bridge to actually being a trader, executing the ideas and being profitable. And then after that, there is another bridge, which is profitable in a prop firm. So if you could talk me through those 2 bridges, from being an analyst to a profitable trader, and then later to be a profitable trader on a prop firm. What are the keys to those?
Yes. So from the analyst to the trader, I think we mentioned a lot of that as well. I think the breakthrough is the mental game and the repetition, the experience, all that kind of stuff, and everything could work for anyone. It has to fit you as a trader.
Right.
And then the mental game is how you tackle the trades itself. Like, do you let the profits run, as you said, or do you have a different strategy? And with prop firms is difficult because 75% of all traders will lose money in the market. That's how the stats are with normal brokers. So what happens if you put more rules on them? Like the drawdown rule, the other rules that prop firm has, that's not to the benefit of the normal retail trader. Yes. in terms of stats. So more people will lose. So it's more difficult to trade with prop firms, and you have to do it like differently, at least how I did it. I tackled the prop business as if the firms are gone tomorrow. So okay. I risked quite a lot, but
risk in terms of per position, you were quite aggressive. Okay,
per position, because the industry is very young. Yes. There's a lot of noise in the industry, so a lot of firms vanish in the next month. So it was I didn't trust them to a point, and the model itself. So I took the month by month basis by them.
Wow, really short term. Yeah.
Yeah. So I tried to get the most out of them in 1 month, and that's it. If there's any bonus, okay. But that's the approach.
Does that mean, like, is there a skill to doing the prop firms? For example, do you go really aggressive in the evaluation phases and then calm down when you have the live account, or do you kind of play the risk reward of the opportunity where you'll buy 10 challenges, you might fail 6, you take 4 that go, and then you make one of them makes the payout. But you know that you might have spent $3,000 on challenges, but that one that finally makes it the payout, you might take 30K. And you play the risk reward of that, or you're doing one account at a time, month by month, as you said?
No, exactly that. I take as many challenges as I can with different prop firms.
Okay.
And the overall risk reward is, like, in this year especially, is 1 to 9 for me. So
risk reward of how much you've spent on challenges versus how much you've withdrawn.
For each dollar I spent, I get $9 out of the prop firm.
Okay, wow.
Business. Okay. So and the risk is quite high, but I'm going just all in.
But it reaches a point where you're not using your money, you're using the last payouts one to
Yes.
refund. So your risk reward of the opportunity. Do you think that's something that is reliant on you being a very good trader and highly profitable? Or is it something that is kind of like anybody can do it as long as you're not a bad trader? Anybody can do it because you're playing short-term windows, and in everybody's equity curve, it's ups and downs. And if you align your up moment with a certain account and you're okay with blowing the rest, do you think that strategy can work for a lot of traders, or you have to be profitable as if it was one account that you're just growing?
Well, in general, you have to be profitable
Yes.
on your business, so you have to know what you're doing in the end. But I think that the approach is very good when you build up a bank, so to say, that you're not dependent on, so you can blow challenges, and then you scale off of that. So buying more challenges, putting up more risk on the challenges on the funded account. For me, the risk between the challenge account and the funded account is completely the same.
Okay.
Because
You're aggressive the whole way.
Yes.
So how often are you blowing a actual account? I mean, you're okay with it because it's a revolving door for you. But how often is it that you actually blow account? Because if you're intentionally going aggressive and you're okay with blowing the account, so how often does that actually happen?
Pretty often. Like,
Okay.
I think with one example, the funded trader that I made the most of, I think I started 50 challenges.
Oh, wow.
And in the end got around 6 payouts, I think, 7 payouts.
But the risk reward was there. Okay.
The risk reward is 1 to 9.
Yes. Okay. How much assets under management in terms of through all of the prop firms and the allocations that you have, how much do you have at the current moment? And what's been your peak, let's say, if it's not right now?
Yeah, the peak was when...
Before MFF, I guess.
Before MFF, yeah. It was more than 5 million.
Oh, wow. Okay.
And now I'm pretty much stopping trading at all. Because, yes.
Why?
Because the last month in this business, they were quite bad. And with all the uncertainty around US firms, I don't know where they are heading to. So I'm very reserved on buying challenges with them.
Okay.
All this stuff that goes down on social media with the
Yes.
business. So it's
Uncertain
in a
times.
very bad state right now.
We only have a couple of minutes, unfortunately, but I do want to talk about this. It brings us nicely to this topic. You mentioned you want to do something different yourself in the prop firm space and maybe bring your own something to the marketplace. What does that look like?
So because of the uncertainty, a lot of traders don't know where to go right now because all that stuff like US MFF situation, what are the props doing? Do they actually pay out? All that things like denying of payouts. And with my background, with 4 years in brokerage, then consultancy after that, I know the whole back end, and I have a feeling when I see this prop firm owners, most of them don't really know what's going on the tech side.
Yes.
Because they are just on a marketing side.
Yeah.
And all third party, yes, you said. And the deal that we are on about right now, or the idea behind it, is to do a 3-column system. So a front-end prop firm.
Okay.
Basic model, like now. Second is the brokerage that supports the prop firm.
Like a normal brokerage.
Normal brokerage, but more institutional based. So really good liquidity that can handle all that stuff.
Okay. And that will be with a real LP and real executions, or is still a B-book model?
No.
Okay.
We have good models, AI models that find the alpha in data, especially from the prop firm. Because what prop firm business is about right now is this whole B-book situation where you only take in challenge fees and pay the profitable traders out on the other side. So what's happening when there are more profitable traders than challenge fees? It collapses.
So you have a brokerage that is supplementing that scenario.
Yes.
Which allows real growth.
Yes.
Okay.
So you have to find a second or third income stream.
And what would be that third column?
The third column would be a real investment fund, a real hedge fund. with real money, a big investment fund.
Okay.
And the idea is to create something new for not only beginner traders, but also good traders, because they mostly don't touch prop firms right now.
Yes.
So we create a path that lets you build a track record through a prop firm. And then if you like 6 months, 7 months, 8 months, a very good trader, you prove in yourself, there's the possibility that you can be brought into the real hedge fund.
Yes.
So with real salary, contract.
Okay.
So like a real propriety firm in the end.
As it should be, yes.
As it should be.
Okay. And whose funds would that be? Or is more, when time develops, that will be decided?
The hedge fund itself.
Yeah, like the real liquidity that's coming, whose money would that be?
It's already an established hedge fund that we have. So we have 700 million under management.
Wow.
It's a real fund that boards on Trader have different strategies, and they have an allocated part of it for forex. So that would be the four behind. So it's all real, nothing in the shades.
Approximately the launch date for this is depending on when this is posted.
Yes, it's early November, mid-November. Depends on when the setup is ready.
Yes. And how long has this preparation to this point been?
Around 7 months.
Okay. Do you have a name for this project?
It's Funded Peaks.
Funded Peaks. Okay, I look forward to it. I'll make sure we upload this once this is already a real project. But I would be very interested to see how this unfolds, especially as the chaos in the industry is happening and prop firms are going to collapse. Other ones will come up, and we don't know. It's uncertain times, but I like the approach where that is an uncertain one, but there is certain elements in your company to therefore see if something negative happens. There's other things there. So I wish you all the best. We are very short on time, unfortunately. I would have loved to dig deeper, so maybe a part 2 another time. But thank you for giving me the opportunity to have this conversation, and I'm sure the viewers would have enjoyed it too.
Thank you very much.